Ever wonder how criminals manage to move illicit funds around the world without setting off alarms? It's kind of a shadowy process, right?
It really is.
And today, we're going to shine a light on one, well, crucial piece of that puzzle: shell banks.
Hmm.
Now, that might sound a bit obscure, maybe technical, but honestly, understanding these is pretty key to grasping the bigger picture of financial crime. Okay, let's unpack this.
Absolutely. So at its heart, a shell bank is basically a financial institution that, well, it only exists on paper.
Just paper.
Yeah. FinCrime Intelligence, their leading source on this, defines it as lacking any physical presence in any country, not even where it's supposedly registered.
Wow, okay.
And crucially, it engages in no genuine banking operations. It's, like you said, sort of a phantom in the financial system.
A phantom bank. I like that. It paints a picture. So why should you,
Yeah.
listening right now, be concerned about these financial ghosts?
Well, this is where it gets really significant.
Right, because these seemingly flimsy entities, they pose a very real, very tangible threat. The analysis from FinCrime Intelligence really flags that shell banks are extremely high risk for money laundering.
Exactly. And other financial crimes, too.
Why?
Right.
Because they're just so good at hiding where the money originally came from.
Precisely. The fundamental danger, it really stems from that lack of meaningful regulation, oversight.
Makes sense.
Yeah.
No physical place, no real oversight.
Without a physical footprint or legitimate licensing anywhere, they just operate outside the normal checks and balances.
Mm-hmm.
And what's fascinating, or maybe worrying, is how this inherent anonymity makes them almost perfect vehicles for illicit activities.
Like what kind of things?
Oh, laundering drug money, financing terrorism, maybe facilitating sanctions evasion, all
Yeah.
sorts of criminal enterprises. They offer a way to shift funds across borders with a much lower chance of getting caught.
So it's effectively a huge loophole in the global financial system, isn't it?
You could definitely see it that way.
FinCrime Intelligence stresses that this lack of supervision creates these major blind spots. It makes it incredibly difficult to enforce the standard checks, like customer due diligence, CDD, and know your customer, KYC.
Right, and those KYC-CDD rules, those are the bedrock, the fundamental checks meant to stop criminals from getting into the financial system in the first place.
So if you can't do those checks.
Exactly. The system breaks down at that point. And because these risks are just so substantial, the international community has, thankfully, taken some pretty strong steps.
Okay, so what's being done?
Well, if you connect this to the bigger picture, you see a pretty clear and coordinated global effort. It's aimed squarely at preventing these paper-only institutions from, playing in the legitimate financial world.
Right, like the USA Patriot Act. I remember reading in the FinCrime Intelligence analysis that it explicitly forbids U.S. financial institutions from setting up, what are they called, correspondent accounts?
Correspondent accounts, that's right, with foreign shell banks.
That sounds like a pretty solid wall to put up.
It is, yeah. It's a significant deterrent. And, this isn't just a U.S. thing. This stance is mirrored globally by the Financial Action Task Force, the FATF.
Ah, the FATF. They set the global standards.
They do. And their recommendations are just as firm. State financial institutions should absolutely not start and should actively end any relationships they might have with shell banks.
So it's not just a suggestion, it's more like a directive.
It's basically a core part of the global strategy to boost financial transparency and accountability.
Mm.
The goal is simple. Cut these unregulated entities off from the legitimate financial network. Sever their access.
Okay, but hold on. If shell banks are designed to be these isolated paper-only things, how do they actually, move money around the world? That seems like a contradiction.
That's a great question. And it brings us to another key area FinCrime Intelligence touches on: correspondent banking.
Right, correspondent banking. Can you explain how that link works? How does it become the weak point?
Sure. So correspondent banking is essentially when one bank, usually a larger one, provides services for another bank, often one that's smaller or based overseas. Think of it like Bank A acting as an agent for Bank B's customers in Bank A's country.
Okay, I follow. Like an intermediary.
Exactly.
Hmm.
Now, the vulnerability pops up if that main correspondent bank doesn't do a thorough job vetting its own clients, its respondent banks.
Ah, okay.
And this is where something called nested relationships can become a real problem.
Nested relationship.
Yeah, imagine Bank A serves Bank B, but Bank B, in turn, serves Bank C and D, maybe even smaller entities.
Hmm.
If Bank A doesn't properly check out Bank B, a shady entity further down that chain, like a shell bank using Bank C, could sort of sneakily gain access to the whole global financial system through Bank A.
Wow, like a backdoor hidden inside another backdoor?
Pretty much, yeah. It can get complex.
So, to stop that backdoor being used, FinCrime intelligence really emphasizes the need for enhanced due diligence EDD, specifically for these correspondent banking relationships. What does that actually involve? What's enhanced about it?
All right, so EDD goes quite a bit deeper than your standard KYC and CDD checks. It means the institution needs to really develop a full, comprehensive understanding of its correspondent clients.
Deeper how?
Well, it includes things like meticulously examining their ownership structure, figuring out who the real beneficial owners are behind the corporate layers. It also means verifying their licensing status rigorously, confirming they're actually allowed to operate where they claim to.
Okay.
And, crucially, it involves continuous scrutiny of their transaction activity, looking constantly for any signs of unusual or suspicious behavior. It's not a one-time check.
Got it. So, constant vigilance is key. But okay, let's get practical. What are the specific red flags? The warning signs that might suggest you're dealing with a shell bank or that one might be lurking in a correspondent relationship.
There are several key indicators that FinCrime intelligence points out. The most obvious one, a complete lack of a physical address or any verifiable contact details if you can't find a real place.
That's a big red flag right there.
Huge. Another one is if a bank seems to exist only online or maybe operates purely through third parties and, crucially, has no proper regulatory filings anywhere. That's highly suspicious.
Okay, what else?
Also, you need to be wary of really opaque or complex offshore ownership structures, where it's almost impossible to figure out who actually owns or controls the institution. Lots of layers, nominee directors, that sort of thing.
Designed to obscure, basically.
Exactly. And finally, if you get a request for a correspondent relationship, but there's no clear, logical business reason for it, that should immediately raise questions. Why do they need this access?
Right. It all sounds like detective work, almost. But I guess FinCrime intelligence also mentions that technology helps here.
Oh, absolutely. Technology is playing a massive role now.
Mm.
Sophisticated tech-enabled due diligence tools, access to big global regulatory databases, these are becoming indispensable.
How do they help, exactly?
Well, they allow institutions to screen potential clients much more efficiently, to cross-reference information automatically, and to spot those telltale signs or inconsistencies much faster and at scale, things that a manual review might miss.
Makes sense. Okay, so pulling this together for, say, a financial institution that wants to protect itself and the system, what are the really critical preventative steps they need to take based on the FinCrime intelligence analysis?
Right. The bedrock, the absolute foundation, is having really robust KYC and CED protocols.
Yeah.
Just non-negotiable. They need rigorous systems to accurately identify and thoroughly verify every customer.
And specifically regarding shell banks.
Critically, they must avoid starting any relationships with banks that can't demonstrate a real physical presence and don't hold the necessary licenses to operate legitimately. Just say no.
Okay.
Then there's the ongoing part. Continuous monitoring of transaction patterns, watching for anything unusual, anything that doesn't fit the expected activity for that client.
And checking ownership.
Definitely. Leveraging beneficial ownership registries, using external data sources, all that is essential for validating who you're really dealing with. Counterparty validation, basically.
And the human element.
Crucial. None of these systems work perfectly without well-trained staff. People need to be equipped to recognize the red flags we talked about, and importantly, feel empowered to escalate concerns about potential shell banks. Training is key.
Okay, so if we boil it all down, the main takeaway here seems to be that shell banks, even though they sound sort of intangible, pose a very real, very significant danger in the financial crime world. And that's mainly because they lack transparency and proper regulation.
That sums it up perfectly. That's precisely right. The lack of oversight is the core vulnerability they exploit.
And the defenses against this threat are kind of two-pronged.
Exactly. First, you have the clear, strict regulatory prohibitions set at the international level, like the FATF standards and national laws like the Patriot Act.
Setting the rules.
Right. And second, there's the absolute necessity for financial institutions themselves to proactively enforce strong safeguards. That means rigorous due diligence, constant monitoring, and just unwavering alignment with those global regulatory expectations. It takes both.
This has been, well, really illuminating. A proper deep dive into something that, like we said, often operates way out of sight. It really highlights how important it is to understand even these seemingly obscure parts of the financial system if we want to effectively combat illicit activity.
It absolutely does.
So maybe a final thought for you, our listener, to chew on. If these seemingly intangible things, these paper-only banks, can be exploited so effectively for crime, what other seemingly intangible processes or maybe aspects of our increasingly digital world might also be vulnerable in similar ways?
That's a really interesting question.
Yeah, definitely something crucial to keep in the back of your mind as we navigate, well, everything that's happening financially and technologically.